Hi everyone, and welcome back to my TRND Bot review series. In this video, I'm going to cover the data and results from testing TRND Bot over the first 2 days of October and the first full week of October, 7 trading days in total. Stay tuned. Before we begin, I just want to reiterate that I am not affiliated with or endorsed by TRND, and the information in this video is for educational purposes only. For the purposes of my data, I counted a winning trade as a trade that resulted in profit, not necessarily one that hit the profit target, and I counted a losing trade as a trade that resulted in loss, not necessarily one that hit the stop loss. Some trades were closed before the stop loss or profit targets were hit due to a signal change. And if at any point you need clarification on my strategy I'm using or the scope of this study, check out my introduction video linked down below. So that the following data and analysis is easier to visualize, here's what the S&P 500 looked like over the course of the first week on a 30-minute time frame. Overall, we had a general upward trend. However, we had the exception of the first being really flat, the second being a little choppier than usual, the sixth having a pretty sudden, high volume sell-off about halfway through the day, and the eighth also being pretty flat. Over the 7 trading days, TRND signaled a total of 49 trades on the S&P 500, an average of 7 trades a day. Here's a breakdown of the distribution of the signals over the 7 days. The two flattest days, the 1st and the 8th, both also had the most signals because TRND is a momentum algorithm, meaning it excels when the market is trending, not when the market is flat, like we've had a lot of recently. I'd love to know if TRND actually performed worse over these flat days or not, but defining flat versus trending can be hard. I don't have enough data yet, and it would likely result in non-objective results. However, if I have enough data, this will be something I try to analyze in the conclusion video of this series. Of the 49 trade signals, 28 trades resulted in loss, 21 trades resulted in profit, which is a 43% win rate overall. I then looked at how often the trades hit their profit target versus hit their stop loss versus had a signal change. 38% hit their profit target, 55% were closed for either profit or loss due to a signal change, and 7% were closed at the end of day for either profit or loss. A whopping 0% of all signals hit their stop loss. I'm shocked because I didn't expect it would be this good. I believe part of why no stop losses were hit is due to TRND typically choosing much further away stops than I would personally pick, but it also shows that TRND intelligently picks them to some capacity. I then calculated the average loss and the average profit of both strategies. Both the losses and profits were reduced significantly due to the large percentage of trades that were closed due to a signal change. Even though $250 was the expected loss per losing trade, the average loss was actually negative $112.94, less than half of the stop loss risk. The average profit when closing 100% of the position at profit target 1 was $188.63. And the average profit when closing 50% of the position at profit target 1 and 50% of the position at profit target 2 was $218.31. The actualized reward to risk ratios were 1.67 for the profit target 1 strategy and 1.94 for the 50-50 strategy, both of which I think are acceptable, if not downright good, for most day trading strategies. And I'll continue to update these as I collect more data over the coming weeks. Even though I only have 1 week of data so far, I thought it would be interesting to look at how often a signal resulted in loss versus profit based on which time of day the signal occurred at. The majority of signals occurred between 9:30 and 10:30 a.m., which makes sense because I considered pre-market signals to occur at 9:35 if I hadn't received a new signal at 9:35, and it's also when stocks are most volatile. The S&P 500 signals had a particularly low win rate during this time at the beginning of the day due to the opening volatility of the market and because TRND sometimes made the stop losses and profit targets too large because they were based off of pre-market price action. The S&P 500 signals had a particularly good win rate between 12:30 to 1:30 p.m., 60%. However, this wasn't based on a very large data set, so I'm excited to see how TRND performs at different times as I collect more data over the coming weeks. That's about all the analysis I could squeak out of the first week's data. So now the grand total you've been waiting for. If you risked $250 per trade at the stop loss for the first week of October using TRND Bot, you would have made $799 using the Profit Target 1 strategy. And you would have made a whopping $1,422 if you used the 50-50 strategy. Now, onto the Tesla data and results. Like before, here's what Tesla looked like over the course of the first week on a 30-minute time frame. Overall, most days had one or two distinct trends to them. Over the course of the whole week, Tesla was pretty much flat, but the 9th was the only individual day that was flat though. By just looking at the SPY and comparing it to Tesla, it's reasonable to assume that trend signals would perform better on Tesla than on the SPY because Tesla had more days with trends. Over the 7 trading days, trend signaled a total of 38 trades on Tesla, an average of 5.5 trades a day. The flattest day, the 9th, also had the most trade signals, just like with the SPY. Of those 38 signals, 17 trades resulted in loss and 21 resulted in profit, a 55% win rate overall. I found that 37% of the trades hit their profit target, 53% were closed for either profit or loss due to a signal change, and 11% were closed at the end of the day for either profit or loss. Just like with the SPY, 0% of trades hit their stop loss. Like before, the losses and profits were reduced significantly due to the large percentage of trades that were closed due to a signal change. Even though $250 was the expected loss per losing trade, the average loss was actually negative $107.22. Again, less than half of the stop loss risk. The average profit for the Profit Target 1 strategy was $211.63, and the average profit for the 50-50 strategy was $247.35, both of which are pretty close to double the average loss, a good indicator that this strategy is effective. The actualized reward to risk ratios were 1.97 for the Profit Target 1 strategy and 2.31 for the 50-50 strategy. Both ratios are quite good for most day trading strategies, and I'm genuinely impressed trend performed so well. Like with the SPY, the majority of Tesla signals occurred between 9:30 a.m. and 10:30 a.m. Interestingly, the Tesla signals had a huge difference in win rate based on what time of day the signals occurred at. The Tesla signals had a relatively low win rate between 11:30 a.m. and 2:30 p.m., which I suspect is just due to lower volume during these hours. The Tesla signals had a shockingly high win rate of 100% between 10:30 a.m. and 11:30 a.m. and 2:30 p.m. to 3:30 p.m., which I suspect is due to the higher volume at the start of the day and higher volume during power hour. I also suspect that the volatility of the first hour lowered the win rate to be much less than the hour after. These 100% win rates were based on 5 trades between 10:30 and 11:30 and 4 trades between 2:30 and 3:30, so these results are not statistically insignificant. I'm excited to see if the large difference in win rate by time of day continues into the weeks to come. So now the grand total you've been waiting for. If you risked $250 per trade at the stop loss for the first week of October trading Tesla using the TRND Bot, you would have made $2,398.89 if you used the Profit Target 1 strategy, and a whopping $3,149.25 if you used the 50-50 strategy. In conclusion, TRND Bot signals were actually effective trading both the SPY and Tesla over the first week of October, in that if you had traded using its signals, you would have profited on both securities while maintaining a risk-to-reward ratio of more than 1, or preferably closer to 2. Though 1 week of profit does not definitively conclude whether or not TRND Bot signals are actually effective, it's a good sign that they may be. I'm very interested to see how TRND Bot continues to perform over the coming weeks. The profit stated does not account for the infrequent but real trades that went to 5x, 7x, or even 9x the risk. If I'd used a trailing stop method, the test would have been less objective, but definitely would have yielded higher total profit. And as we get closer to the election, the market may get harder to trade, so I'm curious to see how trend does. Lastly, the ideal day trading strategy would use a dynamically calculated loss per stop loss, like 1% of the total portfolio value. This means that the profit should actually be higher than stated because the gains from risking 1% per trade compound, whereas the gains from risking 250 a trade do not. However, using a 1% portfolio value stop loss introduces a time dependence into the data that I did not want. That's the end of the first week review of TRND Bot. Let me know how your strategy fared in the comments below, or let me know if there's anything else you want me to test or review. It's my hope that you find this series informative and helpful in deciding whether or not TRND Bot is right for you. And if you like the series and want to follow along, please subscribe and like the video. Thanks for watching.